Zacks Know Your Options, a weekly overview of unique option strategies and ideas designed to help you beat the market no matter which direction it's going. Well, today the Zacks Options Guru is here to talk about intrinsic value. Who is the options guru here? It's Kevin Matris. Kevin is heading up our options page on Zacks.com. He's our top stock screener. He also knows the options market inside and out.
How about that?
I'm telling you, you do so many things here, hard to keep track sometimes. But intrinsic value.
Right.
I've heard that before. That sounds like one of those options words.
That is right. It's one of those options words. You know, there's a lot of different options words. A lot are probably a bit unfamiliar to a lot of investors. You've got words like delta, theta, gamma, in the money, out of the money, intrinsic value, extrinsic value, and I could just keep going on.
Right.
But what we try to do in these pieces is we try to demystify options by explaining the terminology, going over different kinds of strategies, and this kind of thing. So today, we're going to talk about demystifying the word intrinsic value.
All right, demystify away.
All right. First off, everybody knows what intrinsic means in regular, everyday life. It means real, or innate, or inherent, or of within. And in options, the concept is kind of the same. Check it out. Intrinsic value, as it applies to options, is the difference between the underlying stock price and the options strike price that is in the money. For example, if a stock was trading at $50 and a $45 call option with 30 days of time left on it was selling for $6.50, that option would have $5 of intrinsic value. So for example, $50 stock price minus a $45 call option equals $5. If the option premium is worth $6.50, that means $5 of that is intrinsic value. The other $1.50, that would be considered extrinsic value, also known as time value.
See, you had me until that last line there. What does that mean?
Okay. Extrinsic value, let's look at this slide. Extrinsic value, also known as time value, is the amount of the premium that is not comprised of intrinsic value. This part of the premium is said to be your time value, and out-of-the-money options are comprised of only time value. So, using that same example as before, a $6.50 premium minus $5 worth of intrinsic value equals $1.50 of extrinsic value. So the key to remember when you're looking at options is that options are comprised of two parts. You have intrinsic value and you have your extrinsic value.
And the difference to me as an investor or to any investor would be what?
Well, check it out. At the very, very beginning, for all practical purposes, there isn't much of a difference as long as there is time left on your option. So for instance, if I bought an option, let's say at $500, and then I sold it for $800, whether half of that option premium was comprised of intrinsic value, or let's say none of that premium was comprised of intrinsic value, from that standpoint, it really doesn't make a difference. But ultimately, at expiration, when there's no time left on the option, that is when it makes the biggest difference, because at that point your option's sole value is what its intrinsic value is. So, if I had a $50 call option with 2 months of time on it, and the price of the underlying stock was at $45, that option might be worth $3.50 or $350, right? At that point, the premium is comprised of only time value. But now, fast forward 2 months, if that stock is still trading at $45, that option is now $5 out of the money, meaning it has no intrinsic value. And since it's expiration time, the time has run out, meaning there's no time value, and that option is now worth zero. It's expired worthless. If, on the other hand, the stock was at 53 at expiration, all of the time value has disappeared, but It now has $3 or $300 worth of value because that's $3 in the money. It has $3 of intrinsic value, which means your option is now worth $300 if you were to sell it. So again, at expiration, it is absolutely critical if your option has intrinsic value or extrinsic value. Intrinsic value means it has an inherent worth. If there is no intrinsic value, it is worth 0 at expiration.
I think I got it.
Excellent.
Don't bank on it, but I think I'm getting it.
Very good.
And the more we hear about these different concepts and themes and definitions as it pertains to options, hopefully the more investors will realize that this is not as intimidating as people think, and it is approachable material.
That's right. And as we continue to go over these terms and different kinds of terminology, as we start explaining different strategies, it will all make perfect sense.
All right. Well, you can go to the options page on Zacks.com and check out some other interesting articles that are written there as well. All you need to do is go to Zacks.com, scroll down the page until you get to the options section. Click on the link that takes you to the options homepage, and then it opens up a whole world of information. Information you can use to help you know your options. With Kevin Matris, I'm Terry Ruffalo.